Hello, my fellow REIT investors. Mapletree PAC Trust trading volume surged to 425.5 million shares in just the last 6 trading days. Can you imagine, ladies and gentlemen, that in just the last 6 trading days, MPAC Trust shares trading volume has actually equaled what it was traded in the last 2.5 to 3 months. In this week's video, ladies and gentlemen, we are going to see that the share price that has collapsed from 220, as you've seen earlier, 2.5 years ago, currently to 126. Is it about to rebound? So as promised, ladies and gentlemen, we are going to examine the sale of Mapletree Anson by Mapletree PAC. To what extent is that transformational for this particular? Two, is it actually time, therefore, to actually be the catalyst of the rebound in the share and whether it's sustainable? Three, we are going to talk about taking a step back. To what extent have the past wrongs, have the past actions that the REITs have taken that have gone down very badly, institutional investors, are they about to reverse? And what are the things, fourthly, that investors are looking for long-term money to then go back to Mapletree PAC? So as usual, enjoy our this week subscription, like and tell your friends about it, smash the notification button and join us every week for the best insights in real estate. After 2.5 years of poor management, well, ladies and gentlemen, do you reckon it's poor management? Let us know in the link below. Mapletree PAC has finally done one right thing. That is actually selling off Mapletree Anson. Well, just looking at these figures, it is actually not surprising, and you don't need to be very smart to know that it is actually a good acquisition. Why? Because as been stated in the orange arrow there, the NPI yield based on divestment considerations at 3.8%, meaning that what they're getting from the building is based on a yield of 3.8%. Now, the Mapletree PAC is using this money to at 3.8% to actually pay off loans that they have undertaken to actually secure all other assets, particularly the merger of Mapletree PAC done 2.5 years ago. And many of these loans are actually in a range of 4 to 4.5%. So it doesn't need to be a very smart person to understand that this is a good transaction. Certainly, the financial metrics actually support it. For example, the aggregate leverage ratio will finally fall from 40.5% down to 37.6%. We have previously warned Mapletree PAC that its gearing ratio should not exceed 40%, otherwise, its share price would suffer the consequences. Well, management did not hear us. You can see how the share price got bumped and got hit. Hopefully, this time around, they will have a better listening ear. The deal also improved its adjusted ICR ratio from 2.9 times to 3.3 times. As you know, ladies and gentlemen, the MAS mandated ICR is 2.5. But lo and behold, in all the REITs that we have studied in the last 2.5 years, it is clear that those that actually played with the 2.5 times, in fact, just 3 times is actually and will and have faced share price decline substantially. The third metric is that the debt headroom for Mapletree PAC has now increased from 3.2 billion to 3.9 billion. But really, you don't want to be acquiring at this time when interest rates are still high. Next, let's take a step back and see why Mapletree PAC has underperformed so severely in the last 2.5 years. Why at GCP Global investors we have objected to the merger between Mapletree Commercial Trust, which was normally known previously, with Mapletree NEC. And why, therefore, we have actually urged our GCP Global investors, which constitutes of high net worth individuals, family offices, and index fund managers of REIT to stay away from Mapletree PAC in the last 2.5 years. Of course, the next question arises is that has Mapletree PAC done sufficient to actually gain back investors' confidence? Now we'll delve into the key milestones that Mapletree PAC has to achieve before they are possibly able to win back institutional investors, which actually gravitate into the bigger amount of money that you saw. That's why constitute for the bulk of the 425.5 million shares dumped on Mapletree PAC in the last 6 days. Back in the 2.5 years ago, when Mapletree PAC actually merged with Mapletree NAC, the investors were actually swayed by the management to believe that the combined entity will see both DPU and NAV increase by 7% after the merger. Well, in reality, what has happened, ladies and gentlemen? You can see that the share price has crashed instead from 220 down to 122 before the recent price rise. Valuations for Mapletree PAC post the merger has fallen from a price to book premium of 30% down now to a 30% discount of 30%. Now, this was unthinkable, ladies and gentlemen, because Mapletree PAC, since its listing, has never traded at a discount, let alone a 30% discount, something that we warned about 2.5 years ago and continue to warn in our various videos in the last 2.5 years, as you can see over here in our YouTube channel. Of course, for those who have attended our quarterly investment classes in the last 2.5 years, you noticed we have told you to stay away because based on the metric and the actions that has produced the results, the merger has turned out to possibly being what we have termed it as a bullshit merger. Well, do you guys agree with that? Do let me know in your comments below. A shocking thing happened during the AGM, ladies and gentlemen. One question was asked on the board of Mapletree. Why did the board argue strongly for an acquisition of the Hong Kong and North Asian assets from Mapletree and AC? Then later say that these assets are now considered non-core and is prepared to divest the same assets when and if opportunities arise. Shock, right, ladies and gentlemen? Is this an integrity issue? Let me know in your comments below. Can the manager clarify why Festival Walk is not considered a core asset, despite it being the REIT's largest holding? Yes, ladies and gentlemen, Festival Walk is the REIT's largest holding, not Vivo City, yeah? Okay? And mind you, ladies and gentlemen, okay, the Mapletree NAC management fought hard tooth, hand, and whatever you call it, leg, to actually justify the merger, despite the riots in Hong Kong in 2019, to actually go for the merger, after COVID. Can you see? Right now, they are saying that A, this asset can be sold. So the next question that you ask is that, A, if it's so good, why are you selling it? Barely 2.5 years into the merger. So once again, is this therefore a bullshit, kind of a deal? Let me know in your comments below, ladies and gentlemen. I'm not here to make judgment. I just want to hear what you think about it. Ladies and gentlemen, as astute investors of REITs, there comes a time when the mistakes of management, even though they don't admit it, becomes evident, very clear. The share price has been punished. But now that has been punished from a 30% premium down to 30% discount, is it therefore time to be swiveling back into the stock? What are the key milestones that management needs to see before institutional investors would gravitate in? Does the 425.5 million shares of Mapletree PC done in just the last 6 days, equivalent to the whole 2.5, 3 months of trading, justify or indicate that maybe institutional investors are dipping their toes back into it? Now, what are the key milestones that management has to achieve? Let's delve into that in our last section. Once again, as usual, hope you enjoyed this week's video. Give us a thumbs up, and of course, if you want to find out more to actually avoid those stocks you want to invest in, those REITs you want to invest in before the share price comes down, do join us for our class next month on 29th of June, where we'll share such wisdom with you. You can see, ladies and gentlemen, that Mapletree PAC asset now comprises of assets outside Singapore, the bulk of which are the problematic assets. Now, they have actually selling one of the crown jewel, Mapletree Anson, to help lessen the debt and therefore hopefully ride over this high interest rate environment. So the first milestone that institutional investors are looking for is the lessening of the overseas assets, that is the problematic assets, or is there a systematic way of actually getting around that? That's point number one. Integrity and honesty is of greatest vital importance here. So management of Mapletree PAC are expected to live up to what they have just said. That is actually to use the proceeds from the sale to power down gearing and hopefully increase DPU payout for investors. So my recommendation is simple. Two-step, say what you do and do what you say. Simple as that. If you have done that for the last 2.5 years, maybe the share price would have taken such a huge hammering from a 30% premium down to 30% discount. For those of us who are savvy investors, we're looking for further signs to even cement that the honesty and integrity that's actually underlying all REITs are actually key in believing and putting our money, our hard-earned money, into these instruments, and especially more so when interest rates are about to turn. Maybe not in September, maybe not in December, but definitely next year. Well, till next week, hope you enjoyed this week's video. Do join us. Well, next week again, tell us, do subscribe to our channel. And hopefully, if you like more in-depth analysis on REITs, do join us for our class on the 29th of June. Cheers, buddy.